That totally didn't work the way it's supposed to work. Welcome back, everybody, to the wait, why can't I do this? Here we go. Welcome back to Created Work. This is our new mini series exploring the future of investment and funding, leveraging Web3 for creators and builders alike. We are excited to be here. In case you don't know, we do go live 3 times a week. Our Tuesday show is Created Work. Our Wednesday show is The Created Economy, where we do interviews with builders and creators from the space. And on Fridays, I have a deck. I always forget to use that. And on Fridays, we do. We also have our Creative Brief show, which is our news show about what's going on in the space. This is episode 2, by the way. In case you missed it, feel free to tune back into our previous episode over on YouTube. Today's topic is going to be about the funding debate. To the extent that there is a debate, but I would probably call it even better the funding question, which is what and where should founders and builders be looking to potentially raise their money now that Web3 is sort of on the table and provides an opportunity. So we are lucky to be joined today actually by my co-hosts, Abhinav and Arnold, but also our new friend Megan, who is... I'm going to let you do a quick introduction for yourself before I go back into it. So why don't you say hello?
Sure. Hey, everybody. It's great to be here. I am co-founder and general partner at a venture capital fund called King River Capital. We invest in high growth software and technology businesses in the US and in Australia. Generally Series A and later, although I'd say in the Web3 space, we're increasingly looking earlier and earlier and getting to know founders at the start of their journey as they're thinking through these questions. So excited to be here. We've invested in a number of companies in this space, including Discord and Immutable, and looking forward to a great conversation here. So thanks again for the invite, Greg.
Awesome. Thank you. Pleasure to have you. So what else do I have in here? I forgot, I made this last night. Oh, by the way, I just mentioned we do have 3 shows, so feel free to tune in later and give us a follow if you don't mind. We are Created Economy almost everywhere. We're on YouTube, Twitter, Twitch, and Flipboard. I think I'm just giving up on Twitch. Like I can't deal with it. But we are streaming actually today to Abhinav's LinkedIn, Twitter feed as well. So, if you're tuning in there, hi to all of Abhinav's friends. And let's get into it, gang. So we've got a few topics that we want to cover today, or 4 parts. So I think the first area that we were thinking about starting with was just, let me lay out the 4 parts, I guess, right? First is just some key definitions so we understand level set. What are these topics in terms? The second part is what we're calling, quote unquote, the old way, AKA how does venture still play in the world when Web3 is on the table as an investment strategy? The second part is going to be what we call the new way, which is actually raising through revenue, potentially with NFTs or something like that. And then we'll end with the new way, which is with DAOs and sort of like decentralized organizations as a new funding structure potentially for your business. So Abhinav, I think you were spearheading and suggested this idea, hence I'm going to put you in the hot seat. We wanted to talk about some of the key concepts, I think, that are going on inside of sort of the Web3 ecosystem. As a creator, what do you need to know to be able to move forward and make some smart decisions?
Yeah, I mean, some of these are kind of move onto the chessboard, put them down, and then go, oh, wait, actually, that doesn't quite belong there yet, right? So we're still kind of learning and iterating. But obviously, NFTs is the one that everyone's seeing the most activity, I think, on in terms of for artists and also for startups to be able to fundraise by either offering a utility or so that's kind of selling a series where you offer a benefit that's attached to the NFT or allows you membership into a club and kind of gets you into a room, so some value there. Outside of that, there are also NFTs that are being used as kind of badges and kind of things that indicate that you were involved in something. So there's different levels of value and different ways that they're being used. But obviously, so that's probably the most prolific one I see out there. I will go to tokens.
Just to be clear, an NFT, there's 2 kinds of NFTs though, right? Like, so they're not always, maybe we should just unpack that a little bit, because I know like people always think of JPEGs, right? When they think of an NFT, but in theory, right? Like the token is also there, right? Like, so a currency or an asset can sort of exist at the same place, right?
Yeah, and one can generate the other, right? It's now right. It's kind of essentially it's a digital contract, and what you do with it is infinitely creative, right? You can go wherever you want to go with it. So I think we're just starting to see the cool use cases. The basic ones are the PFPs, right? And that's probably the one that most people are know and aware of. The other one would be if you're working in sort of a metaverse VR sort of world. It's then can I buy something that I can use on my avatar and use to be seen in not just a 2D world, but something a bit more more ingrained, more involving than that. So you've got NFTs, which would be pure art, NFT, which is kind of entry into social clubs, NFTs that give you utility. So there's a whole range of those. And I think, like you said, tokens can also pretty much do all of those things. But we can kind of talk a little bit more about my recent learnings about tokens and kind of actually in some ways, tokens seem to be more limiting than NFTs. So probably can come back to that when we get to the progressive decentralization piece. But yeah, tokens can be the same. You could sell tokens to your community. You could swap tokens. So, if you're in the DeFi world, you go into Uniswap. And I think this depends at which stage you are at and how much somebody could understand the value in the token that you're offering them. But you could swap your tokens for perhaps Ethereum, so somebody can stake Ethereum against your tokens, and that provides liquidity for your token, which fundamentally as a startup probably you don't have any liquidity. So it's another way for you to get access to that. And something that's probably one I'm least aware of, and something I'm trying to learn more about recently. And then the fourth bucket would be DAOs, and essentially groups of people. So DAOs looking to invest in projects, them having pooled capital and assessing different projects. So people like Seed Club looking at projects. And I think the way that they normally invest is by offering their token or ETH or another established currency, which you could then use and trade for your means. So I think that's kind of in my head the universe of different tools. If there's others that I've missed, then would love to hear about them because maybe we want to use them.
Any thoughts, Megan? Any concepts that you think founders are showing up misinformed about? Like maybe some concepts we can just drop out there for them.
I don't know about misinformed about. I mean, I think as you said, the world is changing so quickly here, and there's so much innovation happening in this space. We see companies, I think, that aren't even choosing just one of these, funding sources or models, but are engaging in a number of them at once. And so I think it's important to remember a lot of this, is not mutually exclusive. I'm happy to touch a little bit, if it's helpful, on the kind of traditional venture model and what fundraising in that context looks like, and maybe then we can compare and contrast a bit. So typically, venture capital for very high growth companies, generally speaking in the technology space, and the way a venture process would typically work, we would be introduced to a founder, often through, someone who's either come in cold through our website or, outreach we've done. We found their business is really interesting. We're interested in that sector. Or through one of our investors or LPs or a co-investor, another firm that we've worked with, a seed fund, because we tend to invest a little bit later. And we start to learn about the business. We start to get to know the founding team. There's a diligence process, which is increasingly in this market being compressed shorter and shorter. But, we really want to understand the product roadmap. What are you trying to build? What does the growth look like? What are the things we need to believe in order to feel like this is going to be, a multi-billion-dollar, really transformational business? Who do you have on the team? Who do you need to hire into the team? And really importantly, and this I think is maybe one of the pieces that in this new world, I hope people don't forget about and skip over. But what are the needs that the company has that venture firm and its relationships and experience and pattern recognition from working with businesses and seeing the way that this landscape evolves over many years and decades? What are the things that they can bring to the table that can help you really accelerate on that journey? And so that kind of value add piece, I think, is what's unique about venture. A dollar isn't just a dollar, and it's really about figuring out, if you're a business where venture is a good fit, where that growth profile fits, a venture fund's returns criteria, and where you feel like the firm that you're talking to is really going to be able to help you take that step change to get to the next level with the network they have and the experience and perspective. Then that can be a really good path to go through and pursue. But as I said, I think it's also not mutually exclusive. We're seeing lots of Web3 companies now, right, that are taking venture for investment in the equity, but are also issuing tokens. And sometimes the venture firms are able to participate in those as well. And all these, I think, are mechanisms really that you use, hopefully, to align the interests of employees of the business. Oh, hi, Francine. Hopefully, to align the interests of. Got a bit of an echo there. Anyhow, I think, at the end of the day, it's about alignment. And so whether it's your community that you're engaging and trying to make sure is aligned with your growth objectives, or, external investors, venture capitalists, you really want to make sure that the capital you're taking is bringing you more than just those dollars to grow, but hopefully is creating engagement, and acceleration.
Yeah. So, am I hearing myself? Oh, is that this thing? I think something's going on where I'm getting a double. Is it for me though?
That's good now.
It's good now? Weird. Okay. The thing I was
That's
curious
funny.
about.
That's because I unmuted. Why would that?
Oh, no. No, I think it's probably from me, actually, Francine. By the way, do you want to say hi real quick while we have you?
Hi, I'm back. I'm back, and hi, Megan. Nice to meet you.
You too.
And this was better when it was at 6 o'clock and I was drinking wine, but you'll be fine.
You can still drink wine. I know it's 11 o'clock, but hey, it's lunch somewhere. Well, I guess to Francine and Megan, I guess I'll ask both of these questions, the similar questions, because I know we're talking sort of a little bit about the idea that, sort of traditional venture and the relationship sort of to fundraising as companies move forward. Are there analogs in sort of the ideas that, Abhinav has been talking about? Because, for example, with NFTs, sort of these token economics, are there parallels that you can draw for entrepreneurs between the sort of the two worlds and risks, right? Because I think like one of the big challenges right now is you sort of get into this place like where startups need to be careful not to be selling securities, right? Like in their business. And I think a lot of people maybe like when they deploy a token, they may be, acting in a manner that is illegal actually, right? Like in a lot of ways.
That is very interesting. And I think we ought to look into that, because I was thinking, last week I said that what I really have noticed about NFT projects, and it's not NFTs per se, but it's the projects that they are like startups, and so why, if the tokens are a form, I'm just going through this in my mind, Megan, help me out. If the tokens are a form of equity, if the tokens put you in some kind of contractual, shareholder relationship, then why isn't an NFT token, a security? I mean, the project isn't a security, but the NFTs with which it would be funded might really be a security.
I think my understanding of that is that tokens is a direct ownership, right? So you're saying X tokens represent total ownership of the company, and NFTs are kind of an abstraction. They're not saying you own this project, but you have this PFP or this unit, and that's yours. So you don't have any claim to the project as a whole. So I think and so now what I've seen recently, there's something called an INO, which is initial NFT offering. And so that would fall, in my eyes, in that same bucket of tokens, because that is directly giving people equity.
Yeah,
but not all. Oh, sorry. Just to clarify, not all tokens necessarily represent ownership, right?
No.
Yeah, so I'm going to say that this is a gray legal area, and I'm not saying that people shouldn't fund their startups with NFTs and tokens. I think they actually should, but I think that the regulators are going to sooner or later discover this and make a regulation, which I would not be able to predict what it is. Not a lawyer, not legal advice, not financial advice, just long life experience advice.
Megan, what do you have any thoughts?
Yeah, I mean, this is question. I've thought about it more in the specific context of the DeFi space, but which is, I think, where probably the risk is most immediate.
Can you quickly frame DeFi just for the folks maybe who aren't caught up?
Yeah, sure. I can try. So DeFi, is decentralized finance, and kind of the notion that at a high level, it enables you to transact and remove a lot of the intermediaries that sit between parties today, whether it's banks in processing transactions or credit card companies or lenders, et cetera. It enables more peer-to-peer lending, and it enables a financial system where you're decoupled in a lot of ways from the existing system and regulations in a way that hopefully provides, in I think the most optimistic scenario, much broader access to capital and more equitable access to capital across communities and places. The flip side to that is a lot of, I think, the consumer protection issues that Francine has raised, and these questions of what constitutes a financial product, right? Because financial products in most countries, including this one, are regulated under a very different set of standards, and even more so when you get into securities than other types of businesses. And so, the U.S. has come out and said they're following this very closely. I think especially with the just huge growth and amount of investment that we've seen flow into the crypto space in the last couple years, but really the last 12 months, it's been sort of front and center in a lot of the news. And so I think we will see, regulation continuing to evolve here. A lot of the, more significant firms in the space are engaged in trying to make sure that as I said, helps hopefully shape the optimistic version of the scenario where we have better access and inclusion for all. But I think it's going to continue to evolve. And so as an investor in that space, regulatory risk is absolutely a key area we're thinking about and wanting to make sure, not that we don't touch anything that has regulatory risk, but that any founders we're working with really understand that landscape and some of the uncertainty that they're stepping into.
Well,
there is a
thing
what,
called Megan, what if I say, start your company and raise your money this year, because they're still studying it. And I think this year you could maybe get away with a lot of things that next year, not financial advice, not legal advice, but maybe if you did it now, you know what I'm saying? And then by the time the regulations were passed, your company would be up and running. Yes? No?
Well, you're still going to be subject to them, right? They're not going to, I think, probably create a carve out or grandfather in anyone that has been operating in the Wild West. once they determine what the right regime is.
Assets. You'd still be using those assets in a year, right? Well, presumably. Yeah. There is a thing called the Howie Test, by the way, which is the Howie Test refers to the U.S. Supreme Court case for determining whether a transaction qualifies as an investment contract and therefore would be considered a security and subject to disclosure. The test applies to any contract, scheme, or transaction and is important for situating blockchain and digital currency projects with investors and project backers. Certain cryptocurrencies and initial coin offerings may be found to meet the definition of an investment contract under the test. I did share it in the comments if you're looking for it. But apparently there is some way to be like, if there's a promise of future value, I believe, or something like that, there's some criteria that fall under that you may want to look up this thing if you are thinking about making an offering, because I believe if someone can say yes, if it doesn't pass this, or the Howie Test is a way to determine if you may be offering a security or an investment vehicle in some way or another.
And that's why with our social tokens, Greg, that we have to continually say that they are not investments.
That's right.
And
yes.
There's no way we can ever indicate in any way that they are securities.
By the way, here are the 4 criteria. In doing so, the Supreme Court established 4 criteria to determine whether an investment contract exists. An investment contract is an investment of money in a common enterprise with the expectation of profit to be derived from the efforts of others. So I don't know, like that sounds like every NFT I've ever seen. Yeah, I guess the common enterprise part, but I don't know, like if you read that, right, like isn't every NFT with a roadmap like a promise?
A security, yes.
Right? Yeah, right.
I've been following this on Clubhouse a lot in the crypto and NFT rooms. And there are people on both sides of the argument, and those people are constantly talking about the Howie Test, but nobody seems to know the answer. A good person who used to work for the SEC to have on this show might be Alexandra Damsker, because she's worked for the SEC and she has a lot of real information. The problem is there really are no regs. They're still trying to figure out whether Bitcoin and Ethereum are securities or not. So by the time they get down to companies funded by NFTs, I think time will have passed.
So let's go a little further into this sort of this bridging, I guess, between traditional venture and sort of like this new ecosystem of startups, right? And there's 2 sort of operating models, it seems here now, that are not the only 2, but the 2 primary ones that I've heard about, right? One is this idea of, if you're familiar with the SAFE, which was a thing invented by YC, the simple agreement for future equity, which was basically like, hey, let's figure out what your company's gonna be worth later, right? And here's some cash, right? And it's a few pages document, very standardized language. There's a new one now. I don't know how standardized it is, and I don't know where it came from, by the way, but it's called the Simple Agreement for Future Tokens, right? So a similar idea, and it basically is built on the presumption that you're going to mint some kind of token as part of your business in the future, and you will get an allocation, basically, much like equity, and hence back to our previous discussion, right? The second approach is the one that I've seen espoused, Abhinav, right, most dominantly, I think, by A16Z. And I think it just feels the most natural for a lot of us entering the fray, which is this concept of like progressive decentralization, right? So that companies that want to exist in the Web3 realm ultimately still benefit from sort of some starting capital, some initial capital, still benefit from a founding team, and still should then strive or work towards more increased decentralization over time, right? So
which is what they did with Rally.
Kind of like what they did with Rally, yeah. Any thoughts on either one of those topics? Just, I guess, like progressive decentralization or sort of the SAFT, if that's what we call it?
I'm always willing to jump in, but please remember, I could be wrong. I tend to follow A16Z on these issues. And the reason for that is they have been in the space for a very long time. They have raised funds in the space. They have not done it without lawyers. So, and they are not short of money to pay lawyers. So I think, you know what I'm saying? I think if you are a starving startup, it doesn't hurt to follow the path, the breadcrumbs of A16Z.
Yeah. Well, I do think this is a hedge, right? Like, because it doesn't require that you get to a token issuance per se. It doesn't require that you get to some fully decentralized state, right? Which I think is a great, like, it's an easy operating model for founders like us who maybe have already been in building something in sort of the traditional manner, right? And this is how, Arnold and Abhinav and I sort of got together, was like, starting to think about how would we decentralize or integrate more of Web3 into like what we're doing. And that was sort of, I think, what led us to this journey. Megan, are you taking SAFTs now? Are you like, is that a thing?
I can't really speak to that because we typically invest a little bit later. So we don't do safes even, generally speaking. You know, as I said, we're usually Series A and later. You tend to see that more with a pre-seed or a seed investment. But, you know, it certainly
what are you going to do now? What are you going to do now?
Yeah. The challenge I think a lot of venture firms are having is, you know, where do you hold something like that, right? Because often, you know, we also have our, you know, organizing documents and commitments with our LPs, and many of us didn't contemplate investing in tokens when we set up our funds, right? So I think you're seeing a lot of innovation. Yeah.
Can I ask you a question about that? Do you, just relative to this, like what's happening there, do you think that like a fund like yours creates a new vehicle, or do you try to figure out how to like add it to like an existing one? You know, because some funds are meant to last like 10 years or something, right? Like, so
yeah,
like what do you do like if like you're like in year 2 and you're like, oh crap, now we want to do all this token stuff?
Yeah, I think you know, we've talked about this a lot as a firm, and I think for us and probably for a lot of other funds as well, setting up actually a separate vehicle makes more sense, just because it's a very, very different instrument, right, than a venture investment and equity. It's a different timeline, as you've said. It's got really different liquidity characteristics, and I think being able to optimize those sorts of investments for our LPs doesn't necessarily look the same as when we're investing in, you know, early stage startup and taking a board seat, and we're thinking about exit in a much more longer term kind of way versus, you know, more the market fluctuations and opportunistically, I think.
When also, it seems like the question kind of built into that is like, when will we take our returns then, right? Like, because like in a traditional startup, like we know the path, right? But like a Web3 company may peak like in 6 months, and should we maximize our gains then, right? Like,
well, yeah, and I think, you know, you need a whole different lens, right? You need kind of macroeconomic thinking around, you know, particularly from like the currency side, right? Like how are these things going to evolve? How are these regulatory risks moving? And, you know, a firm like ours, our thesis really is kind of, we invest in a small number of companies where we can be very, very engaged, you know, at a partner level. And so rather than managing, you know, 40 companies, we're each kind of working very closely with, you know, 5 or 6. And so, you know, that level of concentration, I also don't know if is the right path when you're thinking about tokens and, you know, diversifying our portfolio there. So it's just a different set of investment questions and thinking. So I think,
well, and what do you do with NFTs, NFT project launches? And, you know, let's assume that you're Bored Ape, you know, and you are the funding vehicle for the Bored Ape Yacht Club. You know, how long when is the deal even over? When do you take your return? You know, because the apes keep reselling and reselling. So what's that all about from the standpoint of a funder? I mean, these are really interesting questions, and I think we're not the only people talking about them, but I would dare to say no one has the answer. Not yet.
I would love to hear more from the founders and creators. Like, how are you guys thinking about this? And what are the drawbacks and benefits you see to some of these different paths?
And Arnold, there are no bad answers, just wrong ones.
No, I think from our end, certainly, I don't know, this kind of gets back to like how you opened it up enough. I kind of put NFTs, I guess, in like 3 buckets, right? It's like gated access, collectibles, and investments is how I tend to look at them. And for our platform, I mean, I think as we think about how we start to integrate NFT into that, you know, it's not even so much from the raising standpoint of it, and it's really more about the access piece of it, right? And that's people on the platform getting access to special things or to, you know, areas within the platform with NFTs. So we're looking at it from more of that standpoint, but it's definitely got us asking a lot of tricky questions and kind of trying to really dig and understand it. It's a lot. It's still not something that we've completely figured out yet, to be honest.
I think it's the law firm continuous full employment vehicle. That's what I think it is.
Yeah, Abhinav, how about you? I guess what are your thoughts, I guess, relative to progressive decentralization, or sort of like the leverage you think that is being created or destroyed ultimately, right? Like with these things.
Yeah, I think the progressive decentralization framework that A16Z have put together is actually quite useful, because it's how we are thinking of, like, okay, we're here, we want to go there, but we don't want to go straight there because it's immutable. If we go straight there, we mess it up, it's gone, right? We've ruined it, right? So anything that says, okay, one step at a time is great. That helps us, right? So that the whole playbook is kind of talking through, okay, start off with a little bit more centralized control. The founders and a more core team have to have more input. You need to shape the product. You can't just throw it out for voting every time you want to make a decision, because you're just going to end up making a weird mess of, like, people's meandering paths. So slowly, and then it kind of guides you through, okay, well, at the start, you're going to probably need VC funding. And okay, some people may be able to hack that by doing an NFT campaign, but you need to already have a bit of a community, a bit of a network to do that. So if you don't do that, or even if you do, VC funding is a great start, because it allows you to avoid the risk of being seen to be selling ownership tokens, which then increases that risk of being seen as a security. So it's a nice framework to walk you through that. So I think, and that's the way we're thinking, right, Greg? Like, we're slowly trying to get to our final end goal, and some of it starts with building NFT and Web3 functionality, gating, and so on. Some of it starts then with, okay, we want to share ownership and actually be able to give some of the benefit away. And then, okay, finally, we want to end up to being on-chain, fully decentralized. But we don't want to go there straight away now, because that's just scary.
Yeah, well, by the way, I agree. I think every choice here feels so large, right? Like, like when you're in a startup and you got the microscope on the thing you're working on, like you can feel like, maybe like, oh, this is going to, like, everything hinges on this thing. That has never been more true than anything I've ever thought about doing, like with Web3, right? Because like, yeah, we try this feature, like it doesn't work, fine, you throw it away. Like that is just not the mindset, like, as founders we're allowed to use, like, with some of these decisions, right? Because, like, you're sort of selling against something very tactical. Whereas I think when you pitch to the community, I feel like the promise has to be a lot realer than when you pitch to, like, say, like a venture investor, right? Because, like, investors understand that the market may move and that you will adjust and you'll accommodate along the way. Community doesn't always buy into that, right? Like, they're like,
community yells out, rug pull, rug pull.
By the way, I want to introduce Antonio. He's here. He's a friend of the show, a creator himself, and also now at the Global Coin Research, which I am, full disclosure, a holder of. Which is an investment DAO. And so we were excited to have Antonio join us as well. One, from the creator point of view, but also I think from the DAO point of view of, like, someone who's actually gone and made that promise. Antonio, say hi, introduce, and share your thoughts.
Yeah, well, I'll introduce and then kick it back. But hey, everyone, my name's Antonio. Working at contributing at GCR DAO, and also Invisible Universe on the NFT side, community side. So definitely on both sides of that land as far as NFTs and tokens. So excited to be here and have this combo.
Awesome. Thank you.
Do you have any answers?
As far as
we've asked about 35 minutes worth of questions of each other. And I'm waiting for the Deus Ex Machina that comes in and has the answer to some of these questions.
Yeah, well, one, they're great questions, and I don't have a clear-cut answer. There's definitely some regulation in the works, and there definitely needs to be some. I just don't know how that falls without downplaying innovation. So I don't have a clear answer on that, and we're all just figuring it out as we go. So we're all in the same boat.
let's look
Has
at it from this point of
everyone
view.
read Moxie, the Moxie
Yes,
blog
the Moxie
post?
post. I'll find it. Antonio, I guess for comparison, you're at a DAO, right? And this is, I think, like one of the challenges Megan is up against now, right? Like, as they try to figure out, how do we engage with like an unknown quantity of people, right? Potentially, right? Like decision making is happening in a different way now, right? And so, can you share how the DAO, like one, what a DAO is, and sort of just how it operates, and especially in particular, like since you're an investment DAO, like what goes on there, in the blockchain all day when you guys are hanging out?
There are like 4 questions layered in there that could go on tangents. But what I would say is, first starting with a DAO. So the definition I like to use is just a network of people working on a shared goal. And also, give me a heads up if there's too much conflicting audio. I have a shared workspace.
I was about to mute myself.
The answer is yes.
So yeah, it's DAO in the sense of shared network. So a group of people working towards a goal without a center person making that decision. So some people like to say there's no hierarchy, but there is a hierarchy in the sense of you do need structure and being able to make those decisions. Everything just can't be willy-nilly, just everyone do whatever. But the way I like to frame it is, instead of one person making a decision, groups, pods come together to focus on particular efforts. And those pods, if they have implications of making a massive impact to the community, come and bring those areas to vote, where areas those pods who are subject matter experts or people in that DAO can work on whatever that DAO is working towards. So if it's like buying the Constitution, or if it's like GCR, identifying new projects for the community to invest in, it's who are those pods working on those efforts, and how do we give them the flexibility and ability to make those decisions, as well as not make a decision only for the community, but involve them in the process. So let me know if that answers it, and then we can chip away at the other questions that were there.
I have a follow-up question, actually. So one of the things, I don't know if this is an appropriate parallel, but sometimes when I think about DAOs, I worry a little bit that there are some really important projects that need to get done for the community actually to strengthen and grow that everyone doesn't necessarily want to work on. It's not the sexy stuff, right? Like, I worked at a nonprofit for some time before we started King River, and it's kind of notorious out there, right? That like people want to fund the stuff that they can see and experience and it's tangible. They don't want to pay for overhead and admin and upgrading software systems and all kinds of things that actually are really important to running a business. And so how have you kind of seen that play out in your experience, or like, what happens when there is some of that fundamental work that needs to get done that everybody's not putting up their hand to jump in and do?
Yeah, so that's a unique one, and it's one I would say it's a challenge that all DAOs are facing. And it's not just only on the work that needs to get done. It's how do we identify the work that we're not even sure needs to get done, and we just don't. We need to put the framework in place to coordinate on that. So it's not an easy answer. And right now, I would say what's shaping up is that DAOs are outsourcing those efforts to other DAOs who might have that experience. Or if members come in into a DAO, that bounty might get a little bit extra love to incentivize someone to work on it. So similar to a traditional environment where you're like, listen, no one wants to work on this. You don't have that same say of, my boss said I really need to work on this. There is no boss. So it's how do we incentivize people to
DAOs are outsourcing these to other DAOs? Is that what you said?
DAOs outsource the other DAOs. So say if you're an investment DAO or you're more of a product focused DAO, maybe you need help on marketing. So you might go to a different DAO that just has really good marketing skills in-house. So it's I would say what you'll start seeing is DAOs outsourcing and coordinating with other DAOs, so DAO to DAO partnerships, in a sense, to help tackle those areas that they're having challenges filling themselves, or that they just simply don't have the resources in-house to be able to tackle.
But aren't we creating a different, we have the same functions that need to be done. We're creating different names for the entities that do them, but Isn't this the same?
It's similar in the sense of you have people coordinating and like on in an effort, like
Yeah.
project managers and roles. Those things don't change, but who they report to and how they operate does change. So instead of it being the CEO or the board, the board is the community. The CEO or the leaders of the pods who really give their groups or their teams the flexibility to operate. So it's similar but different in a sense.
I have a question then for founders, on behalf of founders.
Yeah.
Is a DAO a viable path to raising money today for my startup?
I'm not going to say that DAOs are the end all be all versus, I think that it depends on what your situation is. So if you are getting involved in Web3, and depending on where you're coming from, it would be better to be more community oriented. So a lot of NFT projects now start DAOs. So an NFT project isn't going to, and they're selling their NFTs to bootstrap, those funds. So they're not necessarily going to go out of the way and go to a venture capitalist. But if you're working on SaaS or you're working on software, it could be tough depending on your community to be able to actually raise the funds that you need to be able to succeed. So that's one of those situations there where it really depends on, Megan, you mentioned this earlier, of like being able to recognize patterns of where you're operating and really knowing where, or like getting a better idea of where you're planning to operate. So there's no clear cut answer on that. It really depends on what your goals are, how involved you want to be with the community. It's a bit layered.
But GCR, for example, is an investment DAO.
Mm-hmm.
Is the operating model there that to invest in like companies, or is it other DAOs, or I guess like how does it like work?
Yeah, so it's some other DAOs, it's other protocols, other projects. So it's mostly we want to be that first community where if you're in Web3 and you don't have the ability and the capital to be able to invest in projects, but you at least get that exposure and you're able to see what projects are coming in. And depending on the amount of tokens you do hold, and if you're an accredited investor, you can write those larger check sizes to those projects. So it changes up there. It's some in other DAOs, there's some in other protocols, but the goal is just bringing those opportunities to the community so that they have an idea of what's going on and they have exposure and opportunity to invest in those projects versus the typical route. If you're not already in VC or if you're not an accredited investor, it's helping us kind of democratize that process.
So I could become I don't even know what the verbiage is. What's a limited partner in a DAO?
Yeah, so I would say that anyone, when you look at the DAO space and Web3 in general, you're an investor. You're either investing with your capital or you're investing with your time. So either way you cut it, and especially in a DAO sense, if you're contributing, if you're holding the token, you're an investor in some capacity. It's just how active of an investor do you want to be?
So what if I wanted to become, I'm just trying to figure out how all this works.
Yeah.
Like what if I wanted to become a member of your DAO? Do you take memberships? Do
You buy it. That's what I did. I just went to
Yeah.
Uniswap and bought some of the coins, and that made me an investor.
Oh, so, okay.
Yeah, so it's different.
The whole thing is just a tokenized limited partnership with the larger.
Yeah, it's like an LLC, right?
Like the larger coin holders are like the generals. Yeah.
Just one question. I'm just curious. Does my influence increase with the amount of token that I'm holding, or?
Yeah, so in some cases, you can vote. So you'll see people taking snapshot proposals, and you can vote on different activities. But in order to not sway people who have just more money to be able to buy a token, they're usually voting procedures in place so that one person cannot dictate what is going to happen to the entire DAO, which is very easy if you have enough time and capital to be able to acquire tokens. So what you see is DAOs putting in place governance tokens, liquidity tokens, and splitting them versus having just one token be the end all be all. And then also you're starting to see introduction and the mixture of NFTs and tokens. So tokens more so of rewarding ownership or governance, or maybe rewarding those core early contributors, and NFTs being the mechanism to give membership and maybe some liquidity to the community as a way to use NFT versus relying on their token supply.
So this is to prevent.
I joined something called the Upstream NFT Collective because Drew Austin was one of the founders of it, and I know he's very experienced in the space. And all I see is that it's collecting Ethereum for a wallet, and a community wallet, and I'm just waiting to see. It costs like 0.1 ETH to get in, so I got in, and I'm just going to see what happens now. He could run away with all my money.
Yeah, that is
the double-edged sword
with the community wallet, right?
Yeah. Pull the old rug.
Yeah.
As we wind down now to the last sort of 10 minutes.
Yeah, we're not making people feel like this is something they should use.
We're just going to rename the show "Created Questions" because, but I do like to try to end the show with, I guess, something practical, right? Like something a founder could walk away and do today, right? And this was a topic we sort of had in the middle, and we kind of leaned over it a little bit, but. While the investment side of this, I think, is very complex, and obviously, as we can see, there's still a lot of moving pieces here, right? Like the venture capital world has not necessarily figured out how to embrace this part of the ecosystem yet, but I imagine they'll get there. The DAO part of the world is probably equally diverse in its sort of like underpinnings, right? So that may not be a strong vehicle, but one thing that could work is generating revenue from the Web3 side of the ecosystem. It does give, as we talked about last week, access to a new pool of potential dollars that you could work with, right? A new type of customer that you might be able to leverage, right? There's an interesting app that I know of called Floors. Who's seen Floors? So Floors is like an iOS app for looking at your NFTs, basically, and it tracks the prices that goes up and down. And they've done an interesting thing where they did these generative NFTs it was the way to get into the application itself, right? And by the way, the whole goal of this series is for us to replicate this in one way or another, like somewhere, right? But what they did is they sold it at the first generation of 0.1 ETH. They sold like 250 of them or something like that. Then they did a second generation at 0.2 ETH. And I believe they did a third generation, and that third generation just sold out yesterday, right? Now, obviously, this is like kind of on the nose. It's like an NFT app for NFT owners, right? So obviously, you're gonna pull some money here, but what about this idea, of sort of like gated access or early access to things, right? Tools, technologies, et cetera. As a revenue source now, not necessarily as like an investment source, right? Because now we're saying, great, you want access to my product? I can do it. There's another tool I use called Superlocal. And they just NFT gated their test flight, right? So the only way to get the test flight app was actually to have the NFT. And then you basically get in there and you start to earn currency. So like, I'm planning to do this. Like, hopefully by the end of this month, I'm going to launch a super early access NFT pass to Zealous, right? What do you guys think about these approaches, I guess, from a revenue point of view, as opposed to necessarily like a investment point of view?
I don't think it's that different from what a lot of companies have done so far. There are a lot of companies out there that I've seen it like a fair amount on the hardware side, right? Which is a little more capital intensive, where if you want to be an early adopter and have access, right, you pay up. You can, submit to be emailed on the waiting list, and then one day you get an email and it says, send us $300.
It's like the Kickstarter.
The wearable, right?
Yeah, it's like the Kickstarter instead of the Republic, right? Like kind of thing.
Yeah. So, I think it's awesome to fund through revenue. I think for a lot of companies, right? Like,
well, it's the tried and true method of funding, right?
Well, sometimes, right?
If
it's there and it's sufficient to get you to the scale that you want, right? That's the question. And so I think, back to sort of where we started in this, really knowing, I think, what your end game is, and then figuring out what the right combination of funding sources is going to be to get you to that is really important. This isn't, for all the reasons you guys have laid out, like, this isn't a place where you can make easy pivots, right? Once you've decentralized, like that decision has been made. And so, there are amazing, fantastic businesses that bring a lot of utility to the world and wealth to their founders that don't end up being, $10 billion VC backable companies.
Right.
Some of these can be great models to build something like that. Like not everything's going to be a perfect fit for VC the same way not everything's going to be a perfect fit to do as a DAO or to tokenize. So really understanding like that end game and
really
then finding smart people to figure out the right path.
Yeah. Most companies are not venture ready or sort of scale type businesses. Actually, let's be honest, right? Like I think we have tons of entrepreneurs chasing
nothing wrong with that, right?
No, there's nothing wrong with that whatsoever. But
not everyone's going to grow 3x year over year, right? And
culture has taught us that a lifestyle business is a dirty word. I think I'll take a $50 million a year lifestyle business and be really happy.
I actually
Many people
I've lived with a lifestyle business the whole time that I've started businesses, and I've never starved.
Yep.
By the way, Greg, I think I downloaded the wrong floors because I ended up with a kids game.
No, Francine, you have to finish the game and then you get the NFT. No, just kidding. I'll send you. I'll DM you a link to it to check out.
Because I'm in floors and doors and Mansion X and flippy floors.
Abhinav, Arnold, I know you guys. We came down this journey together. I think to think about it as a revenue centric sort of thing. What are your thoughts in this arena?
Well, I would ask, I'll flip it out. And since I've got the opportunity, right, for us, one of the biggest growing customer bases or potential customer bases is DAOs and NFT communities. So whilst we have people here, what do you guys, would you guys see in terms of use cases for communication platforms for NFT and DAO communities? Are there specific features that you see desired? Is there a specific type of communication rhythm? Is everything supposed to happen behind closed doors, or is it supposed to happen kind of in public?
So I would say as far as communication, everyone uses Discord, but it's definitely not, it's a Band-Aid approach to how complex DAOs are. So ways to, and this is something I mentioned to gregarious with Zealous, is just ways to easily navigate between chats that happen for pods and chats that happen for members and chats that happen for contributors. I don't have the best answer on it because it's still new, tracking how a DAO coordinates and communicates, but it's definitely having the flexibility of and something a little bit more customizable than just Discord. But what does that exactly look like? I don't have a clear answer on what it looks like yet, but I just know that maybe Discord could be it, but right now it's just a temporary approach.
I will say that I remember, I think I was on a panel with Andrew from A16Z, and he'd asked a question like, don't you think all this creator economy stuff is going to consolidate, right? Mm-hmm. And I actually think, and I did a very long thread about why I thought that wasn't going to happen, largely because I believe of the personalities and sort of all the nichification that happens inside the creator economy itself. I think the Web3 world is like that times 1,000, right? Because what works for one set of lassoed people together is just going to be so different than the others, right? And that's the power of it to some degree as well, right? Which is that we build the software we need to do what we need to do, as opposed to relying on the software that says how we do it.
But Abhinav, there's a huge need for a communication platform that isn't Discord, which is, I find Discord, reprehensible. And I mean 30 Discord channels, and every single one of them, the rules are don't turn off your DMs. I'd like to get into something a little more, a little less dangerous for the person who's just checking in on their community. Yeah. So, it's like Twitter seems like a gift compared to Discord. So anything that combines the functionality of both Twitter and Discord and filters out the snarkiness and scamminess would be awesome. It may be impossible.
We're not laughing, Francine, because Megan's an investor in Discord.
Oops.
Big Discord fans here.
Yeah.
I think Discord hears us on this, though. By the way, right?
I totally agree. I think.
Yeah.
But
I think you're right,
evolving
Francine.
by leaps and bounds.
Yeah, no, I think this is and by the way, Arnold, Abhinav, and I all have community platforms that are, I wouldn't say competitive, but are overlays or sort of trying to help solve some of these gaps that do exist in the market for the folks who are trying to sort of use it or stretch it into these new areas that they're trying to accommodate, right? Yeah, I don't know. Arnold, what about you? What do you think? How do you see this falling out?
No, it's interesting. I mean, just especially when, I think about some of the models of using NFTs for like gated access, right? Basically that future utility. It makes me think that the community up front has to be incredibly strong and really engaged to be willing to pay for that future access, right? And, obviously the traditional model was more about, drop in your social and you'll get on a list. And then as you do different sort of gamified things, you move up that list. But I think it's very different to say, now part with some money and you'll get this level of access. And so again, like on my end, where we're not a traditional Web3 company, we're more of a 2.0 company thinking about 2.5, right? How do we add those three components to that overall structure? It gets interesting because that model of building a large community like that it just doesn't necessarily like blend over, I guess, as cleanly as if it were like so I don't know. It's interesting thoughts that we're kind of like working through that to figure out how do we. Again, I guess more questions, right? No answers here, but how do we sort of sift through that and make sure that the buzz is there, but the community's engaged the right way. But I think maybe to sum up what I'm trying to say is that I think that's just a critical piece of it that can't be overlooked. Is that community, that super engaged and passionate community, has to be built up front and first, before any sort of future utility, NFTs or tokens or whatever, can even be really thought about, right?
Yeah, I will say, I know we do have to go, but one of the things that I had heard, Legion had said this in a last week, or was it? It was last week in a talk she was doing about the future of this year or whatever it was. And she made a good point that NFTs kind of fulfilled a lot of the promise that I think social tokens kind of promoted, right? Like that they were offering, because the membership part of it, et cetera,
Right.
like is better serviced by sort of the NFT part of that ecosystem. I will say that every founder who's found those early evangelists, though, right, likely that is, to Arnold's point, that type of person who might want to hold your NFT, who might want the first crack at whatever you're building, who might want to be able to have a little bit more influence in the process of shaping what you make. And as founders, I think that's probably a good place for us to start, at least, right? Of course, there's also the crypto magic, like the weird part of crypto that just buys crap randomly that we don't understand why, but hey, like if it works, like let's do it. And maybe we should still try to get some of that. But I do think, like, don't think about it as the magic part as much as thinking about it as there are people who believe in what I'm trying to do. They want to support it because they want to see it exist in the world. It's why we're all entrepreneurs to begin with, is that we see a future that we think should exist and we build towards it, right? So on that note, I will say thank you. This has been an awesome conversation, full of lots of questions with zero answers. But that I think that sort of sums up.
And
what
Megan, I'm sorry about Discord. But
Don't be sorry. I'm not sorry.
I've been on Discord since it started as a back-end chat service for 13-year-olds. And I've been waiting for when the adults come on. May never happen.
I think everyone understands where Discord sits in the ecosystem, and I would say it'd be foolish to go head on with them. Like we're building our first path is actually a Discord on top of Discord, right? So I think that's a good starting point. Look, like I said, I think this conversation's been great. Next week, what do we have next week, guys? Do you remember? Got what's up next. But I think we're moving into some of the technologies starting next week. But we will be back next week, Tuesday at the same time. We have this conversation every week, except for the week after this. But I can't tell you why yet, but you'll hear about it on Thursday. But yeah, welcome. Thank you so much for all being here, for participating, for sharing your thoughts, and for pointing out that the confusion is real and shared by everybody. So don't worry. There's no right answer yet. It's all early days. All right.
Thank you so much. Great to chat
Thank
with all you
you.
guys.
Thanks, everybody.
And thank you, everybody, for joining.
Great
See y'all
chatting with
soon.
you guys.
See you
All
guys.
right. Bye.
Bye.